Just based on the financial strength of their balance sheet, this company isn't failing anytime soon. All right, welcome to Talking Investing. I am Tom. This is not financial advice. We're here to talk about all things investing, and today I want to talk to you about a stock that is massively shorted. I want to show you what I'm looking at and go through why I think there's big upside to this, including a potential short squeeze. This is a very unique stock. It's in the EV sector as well as the solar sector. So these are two, what I think are very hot sectors. They're both in a massive growth stage, and this company has found a way to combine the two, and I think is on track for big things. Having said that, it's one of the most shorted stocks in the stock market, and I really don't see anybody talking about it. I don't know why. So I'm going to do this video and show you why I think this stock is way over shorted. This is not financial advice, but I think there's opportunity here. The company that I'm talking about is BEEM Global, stock ticker BEEM. So this company has created an electric vehicle charging station that uses solar energy. It's got a lot of unique features that separate it from any other charging station. This is the company's website, company BEEM. This is their product right here in the picture. You'll see these solar panels and they're basically in a parking space. So unlike building a traditional EV charging station, there is no construction whatsoever, and you can move it if you want to. So this is not meant to compete with regular charging stations. This is meant to supplement those. The market cap of this company is $255 million. The stock is trading at around $29. The float on this stock is approximately 8 million shares. Currently, as of today, there are over 3 million shares shorted. That, as you'll see right here, is nearly 40%. So that is 3 million shares, almost 40% short. Now, here's what's interesting about that. If we go back here, you'll see the average trading volume for this company is 340,000 shares a day. They are shorted 3 million shares. That's 8 full days of average trading in order to clear out the shorts on this stock. So that is an abnormally high ratio. Even stocks that have a big short interest typically are much more liquid than this and have very high volumes of daily trading, so that even if it's 20 or 30% shorted in a half a day or maybe 2 or 3 days at the worst, the shorts could wash themselves out. This would be 8 days of regular trading in order to wash themselves out, which leads me to the possibility of a short squeeze, because it won't fix itself over 8 days. It will more likely be one high volume day where at some point the shorts have to scramble to get out of this thing as the price is rising. And that creates more pressure. As you know, I'm not going to go through what a short squeeze is. One more crucial number. Cash. This is their Q1 March 31st balance sheet per their SEC filing. So current assets, cash in the bank, over $28 million. So this company has $28 million in the bank. Historically, their annual cash burn rate has been $2 or $3 million a year. Let's say they ramp it up and it's even $4 or $5 million a year. That would still leave a 5 or 6 year runway of cash, if not potentially more, 7 or 8 year runway if they stick to what they were doing. So this company's not running out of cash. That would be one of the reasons that you would typically short a stock in such a heavy amount. It's a business where, there's low growth, and before they can get to where they're going, they're probably going to run out of cash and maybe have to do, at a minimum, have to do a big equity and dilute their shareholders. That's what the shorts would be counting on. Or at a maximum, that their business fails and they go out of business. Just based on the financial strength of their balance sheet, this company isn't failing anytime soon. So it would be a long road for the shorts to hold on to. In addition to that, not only aren't they failing, I see a massive amount of growth potential for this company. So I'm going to show you the chart real quick. Let's just take a brief look at where they've been as an indicator of where they could potentially return to and what some of the upside of this stock might be. Okay, so here is their chart. You'll see they're at $28.97 right now. I've drawn a green line at somewhere around $27.41 is what it looks like. That's give or take, and these lines aren't exact. That's a line of support. It has found strong support somewhere around $27. It's bounced off of it several times over the course of the year this year. Now, so the downside risk is small, but what's the upside? Here's where we are now. This is where we were 3 weeks ago. So this is June 29th, and today is July 19th. So somewhere around 3 weeks ago, we were 40% higher than we are right now. This was a $41-ish stock. It's under 30, right? It's under 29 right now. It's $28.94. So just to run up to where it was 3 weeks ago, there's 40% upside on this stock. That would not be a short squeeze. That, I think, it would be a normal return. That's within its trading range. So I would traditionally expect to see it trade up and down and probably get back to $40 without a short squeeze. If this were to get back to its highs where it was in January of 2021, that's almost 160% upside from where we're sitting right now. So you can see the upside potential here, even to just get back to where we were 3 weeks ago, would be 40% up. You're looking at a potential, in my opinion, and this is not financial advice, please do your due diligence. There's a lot more to learn about this company. It's a fascinating company. So just to get back to where it was 3 weeks ago, you're looking at a 40% upside. So to think that this stock, and to get back to where you were at the beginning of the year, you're looking at 160% upside. In the potential that they have a short squeeze, you could easily see the stock doubling or tripling, in my opinion. So this is not one of those, it's going to 1,000. There's going to be a short squeeze and a gamma squeeze, and this is just looking at what's already happened this year. If it just gets back to where it was, it's going to double or triple, and with 40% short interest, and more importantly, such a very small float. There's only 8 million shares of this in the float. There's 3 million shares shorted, and there's only about 300,000 or 400,000 shares that are traded per day. So to me, this is shaping up to potentially a perfect storm to get either a little bounce or a very big bounce on a short squeeze. So please do your own due diligence. Those are my thoughts. This would be short-term swing trade, in my opinion. I may do another video where I look at it as potentially a long-term buy and hold. But for now, what I'm talking about is a short-term upside pressure. So thanks for watching. Smash the like button, subscribe to the channel, hit the notification bell, and we will see you in the next video. Good luck investing.